Do, 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 do. All right, guys. WPZ. That's William Partners on the New York Stock Exchange. And look at that. This is the monthly candle chart. We're going to identify the higher prevailing trend. Look at this back in the days. Beautiful, beautiful basing action for stage 2 that lasted. Man, how long that lasted, stage 2? 820 plus days, 822 days. That is just crazy. And we're going to check it out. When we're going to go on weekly, we'll show then this is really important, is the one of the big advantages of doing Stan Weinstein stage analysis is he's going to make you go in at the run when the choppiness of a stage 1 is dead. He's going to make you run. He's going to catch you here at the beginning. And with his exit, his strategies to exit by moving the sell stops under previous lows that had pullbacks, or exiting if a trend line valuation has been validated, and not just any trend line valuation, a Stan Weinstein valuation. That means it's a valuation on the 4 of break. Trend lines, usually it's 2 points. It's enough to do a trend line. Stan, he wants 3 points, and then on the 4th, you'd exit half your position. And the ultimate get out of there is any violation of the 30-week moving average, you're out of there. So the way he built that is all those criteria, the trend line, pullbacks that go lower than the previous pullbacks, 30-week moving average violations. That's all signs that the run, the stage 2, the growth, the increase in your NAV is going to start slowing down or might even reverse. And he wants to get you out of there. That's what you call a stage 1 or stage 3. Is this choppiness here when the market decides, oh, am I going down? No, maybe not. Oh, go back up. Okay, fine, we're going down. And then the same thing here. He's going to make you enjoy most of that stage 2, stage 4 breakdown, and all the way till it exits here. So usually stage 2s, they're shorter than stage 4s. This is called fear. Greed takes time to build up. And fear, the price goes down, it really goes down fast. Basing action that goes up, usually it's these nice rectangles. And the tops usually are big formations that have mood swings. Go down, test up, go down, test up, and then go down again. All right? Cool. So let's identify. Okay, my breakdown level is right here. Like that. Oh, another one here. Oh, magic. Oh. So what do we have here, guys? Let me zoom in like that. Still getting used to the software. I need to measure move. Give me my arrow. So actually now, man, we're really close to having a breakout. This is the 20th. Be posted on the 21st. So one more week pretty much to wait, guys. And this is the measured move, the target. If we have a close above $42, we have a target just under 50, 49.70. And enter my target considerations. Oh, we're pretty good here. I'll show you this right here. This is a wall, previous support, turn resistance, right here. So what I want to do is lower that target right under, just to make sure that when you run to this wall, you get triggered out. The risk is not worth it of really just, hey, I'm going to get to my target. It's the implied measure move of my pattern. That's what I'm going to get. If you have, no, adjust it, guys. Adjust it, and then that's the type of a trade that you forget. You enter, you enter here, Wherever the close of this candle is, put your sell stop here, and then you put your profit limit here. But we're doing this now because we want to see if the trend's going to be going upwards. And it looks like it's going to be going upwards, guys. At least going all the way to 48. If next month, look, remember, we could have a wick like that, right? So wait, this at price action in 1 week and 1 day could easily close below the breakout level, which is at 42. Just beware of that. Be patient. 1 week. That's all you have to wait. Go look at the other charts. Let's do it, guys. Monthly. And weekly. Stan Weinstein. Ah, man. I keep doing that. Why? I have to right click. Zoom. Oh, okay, here we go. Here we go. I'm on the weekly. What do we need? I need my volume. I need my Ichimoku cloud. I need my 30-week moving average. And I need my super duper Mansfield Relative Strength Index, guys. This is NASDAQ, New York Stock Exchange Index. TradingView, the more I use it, guys, it is like every little thing that I wanted. It's there. It really made it cool. I'm going to see if I could try to API it to my interactive brokers. I don't see it's there. So I could just trade off this, man. It'd be awesome. I wouldn't have to open my interactive brokers anymore. Okay. What do we need? Okay, let's zoom in. This is our nice stage 2. Look at that. Stage 2. That was that nice base. Stage 2, stage 3, stage 4. It's beautiful, guys. Look at that. No violation of the 30-week moving average, except towards the end. Let's check it out here. Look, this is the beauty of Stan's system, guys. You would have entered pretty much about, well, it's hard to tell here. Let's see the volume. These are volume candles. These big candles are kind of skewing. But here you had volume crescendo. Maybe not twice the average. Maybe this one twice the average of the previous 4 weeks. You could have entered right here on this candle. Where am I? Right here. So on this candle here, you would have entered. And let's do this super duper tool, guys. Would have entered right here. Sell stop. Below 30-week moving average, below the launching pattern. Target. Let's move that. Scoot. And I'm pretty sure this is going to be our target right here. You know what? Before doing that, let's hide it for now. Yeah, you could hide stuff. Trend line. Remember, trend line violation. How many points? 1, 2. Here's a whole bunch of points. There you go. 1, 2, 3, 4, 5, 6. All right, a whole bunch of points. So you know that when this trend line violation is going to happen, you are going to be taking half of your position out, trader or investor. Remember, price action goes up, price action pulls back, price action starts going back towards your top. Got pretty close here. Where's your sell stop? Below the lull. Below a 30-week moving average, below a round number. Traders, investors, same thing, below that lull, below 30-week moving average. The traders, the investors' sell stops start behaving like traders towards the end of a trend, a stage 2, and that's usually your clue that it's towards the end. Is when that trend line like that's being violated. When the 30-week moving average starting to get violated, Then what's going to happen here is trend line violation here. Take half your position off, and the remainder half, traders and investors right here. So worst case, this is where you're going to have taken out. Let's do it again here. Where am I going to get in? Where do we get in? Right here. Sell stop. Right here below the low. And where are we going to exit? Right here. So this is the move, guys. Risk 1% of your NAV. Position size. Reward. 7.2% of your NAV would increase. 100K NAV. At the end of this trade only would have increased your NAV by 7%. Just this one trade. And you rolled most of it. It's so simple. No chop here, guys. You rolled most of it. No false signals. You're above the Mansfield. The 30-week moving average is going upwards. The price action is above the 30-week moving average. You have a horizontal breakout line with volume twice the average of the previous 4 weeks. You have all these checks. There's Ichimoku cloud. Is it below you at this stage? Let me zoom in. Yeah, you're above the Ichimoku cloud. All these clues, guys. Make sure you avoid whipsaws. You know that you're at the beginning of stage 2, that stage 3, or that stage 1 is done, or has a high chance of being done. So, great at getting you close at the end of a stage 3 or stage 1, and it's awesome when the chop's just about to start, just because of this lower low going below the previous low. It's not a good sign. You're out. And you know what? If the market decides to go back up, you're not wrong. You're out. You took your money. And you're just going to wait for another consolidation pattern. It happens all the time. Stage 2s become stage 3s, and stage 3s continues. So what's going to happen here? You're out of the trade. You put an alert here, starting to draw out. Then you say, okay, here I have it. Might have a continuation pattern. And if that doesn't work out, then you could start drawing. If the price breaks down, then you can notice if it's going to be a stage 4 that's going to get there, guys. It's the beauty of stand, guys. It gets you out of the chop before the chop. Use it. Maybe don't trade like using it, but at least apply the framework to say, okay, this stage is over. I'm moving on. Okay, here we are today, guys. Back into stage 2. Look at that volume. Okay, it started, I think, even here. Look at that. Right here. Remember, I keep saying, I don't like the first breakout. I like the second or third. Well, here was the first one right here. This big candle off the base. Does zoom work? Whoa! What the hell? Sorry, guys. You know what? Maybe I'm better to scroll like this here. Oh, okay. There we go. So here I had... Okay, right here. Breakout, twice the average volume of the previous 4 weeks. Above the Mansfield, above the 30-week moving average. At the volume, above the Ichimoku cloud, but probably not above the monthly candle. Monthly candle breakout line, we said was 42, right? So you're still under. This is embryonic, but it's a very good sign. That gets your attention. You start setting your alerts. You go look at your monthly. Where's my monthly defined breakout line? You put at 42, and then you wait. 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, 6 weeks, 7 weeks, 8 weeks. And 9 weeks later, that's over 2 months later, then you have it. That's almost twice the average volume the previous 4 weeks. You're above the 42 dollar mark, monthly defined breakout line. You're still outperforming the market, the index you're in. You actually bounced off it. This is very constructive. All you're missing now is just that close, guys. One more week, that close above 42. Let's see next week. Maybe we're gonna get a stronger candle. That'd be awesome right here. We could have a candle like that. Maybe during the week, price action goes down and then closes up here, and crescendo volume. Maybe a crazy volume up here, big square volume. Then you're in, guys. This is stage 2 continuation. No chop or lower the probabilities of that being chop. and you're just ready to go. Pretty cool, right? That's the beauty of Stan, man. This system is one of the simplest systems to just get going with it. The way he wrote his book, Profiting in Bull and Bear Markets, very simple, but very hard to master. Not to scare anybody, but really to understand it and really to trust it. The trust is going to help you override your emotional instincts, which you have to avoid. His system is based on almost contrarian theory. You have to respect it and forget about all your emotions. And if you do it correctly, it'll serve you well. And these podcasts are there to help you. They're helping me. I'm using them as a mirror. I keep watching them, see if what I'm doing wrong, how I could do it better. I used to use the RSI. He's a trader, told me you need the Mansfield. I was looking for it, couldn't get it, but there's no substitutes. I see the difference now using the Mansfield. The stage 2s are better isolated. They help down select to the best of the best, the exceptional winners, like Stan used to say, guys. All right, keep an eye on this one. If it closes above 42, man, that's it. You got monthly candle breakout confirmed, and you got the stage 2 confirmed. That's it. All right, bye. See ya. Ciao.